If we want a different pipeline, we need more women CEOs. That is the fact. The fact is there is an 80% difference. So either we get more female CEOs or we're going to be stuck where we are in the glacial space, right? Doesn't mean it's not going to change over time. It's going in the right direction. It's going to keep on going in the right direction. But the fastest way to accelerate this is by having more women CEOs.
Welcome to Knowing Me, Knowing You, the podcast for the future of wealth management. Thanks for being here. I'm Marla Sofer. Money is a tool. It empowers people. Let's dive into how technology is personalizing advice, strengthening connections, and creating lasting impact. If you're an advisor looking to differentiate, a fintech leader shaping the next wave, or a client ready to take control of your financial future, you're in the right place. Let's get started. Hello, and today we have the incredible honor of speaking with Patricia Lizarraga, the founder and chief investment officer of Hypatia Capital. A seasoned Wall Street veteran with over 30 years of experience, Patricia has been a passionate advocate for investing in women since 2007. She is the driving force behind the Hypatia Women CEO Index and the WCEO ETF, groundbreaking initiatives that not only recognize the power of women in leadership, but actively invest in it. Patricia's work highlights the fact that many still don't know that companies led by women CEOs often outperform their peers, promotes more women into leadership roles, and lead in sustainability. Beyond her investment work, Patricia is an independent board member, an audit committee chair, and an SEC-designated financial expert, a true leader whose career exemplifies excellence, integrity, and purpose. We're thrilled to dive into her journey, explore why investing in women is good business, and hear her vision for a more inclusive financial future. Patricia, welcome to the Knowing Me, Knowing You podcast.
Thank you, Marla. It's really a great pleasure to be here, and I'm really excited about what you're doing as well.
Thank you. I appreciate that. We always start off with an optimistic note. What excites you about the moment that we're in right now? You know, the podcast is about the future of wealth, and we've had some other guests that kind of are focused on women and the opportunity to invest in women. I'm curious, there's a lot to say about the challenges that we are facing right now as it relates to diversity and inclusion initiatives. And if you were just going to look at the flip side for a moment, what is exciting about this moment? How would you frame that?
There's never been a better moment to be a female executive or female in business today. I mean, the fact of the matter is when I started my career, there were 0 women CEOs in the Fortune 500, right? And now we're at 10%. When I started Hypatia, there were 2.
Wow, that's amazing.
Today we're at over 50. So things are getting better. Things are getting easier because there's more women in leadership. And the fact is, there's also going to be more wealthy women as we move forward. I mean, I'm sure that you've read about it a lot, the great wealth transfer, and how it's really a lot of it is coming into the hands of women. So you have more women in leadership and more women with wealth. That is a great place to start leveling the playing field.
I love that you started with a data point. You basically said, look, we are in the best time we've ever been. It started at 0, and then we got to 2 in 2007, and now we're at 50 out of 500. And it's an iceberg moving perhaps, but it is moving and it is changing. You've been investing in women leaders since 2007, before it was trendy, before this became kind of a opportunity that everybody wanted to get in on. What sparked the focus originally for you?
Sure. So my background is in investment banking, and I'd been doing it for, a couple decades, but I'd never had a female client because there were no women CEOs. And then all of a sudden one day I had a female client. It wasn't of a public company. It wasn't even an American company, but it just opened my eyes to what a female CEO would look like. What would happen if a woman is in charge? And I loved it. And I'm like, wow, she is so 360. She checks every box, where are her weaknesses? Couldn't figure it out. And it dawned on me, 1, I want more clients like her. I just want more female clients. And 2, it also dawned on me that the reason she became CEO is because she did check all of those boxes. Because if she missed one, she wouldn't have gotten chosen. And that made me think, you know what? the women who make it this far are going to be better because they have to check more boxes than the average person, or they will not get selected for the role. And that is the underpinning of our investment thesis, which is that women CEOs will outperform.
That's fantastic. On this same question really quick. So what sparked your interest is that there really were no female CEOs, and then you found one and you wanted more of them. And so you kind of went down this journey of trying to get more women to be CEOs. What were some of the learnings that you kind of took away about what was holding them back and how to actually encourage the market to be maybe more cognizant, more appreciative, I don't know, more eyes wide open to this huge opportunity?
So even 2007, when I started Hypatia, Catalyst was already counting how many women executives there were. Catalyst, the organization that counts this, and was saying that that companies with more women on boards outperform. They weren't going as far as saying it's because they have the women, but they were saying the data is telling us something. So that supported this thesis that I was telling you that I was observing, right? And there wasn't just the women. I was also seeing my cohort, my age group, late 30s, on some level being part of the reality that women get promoted on experience while men get promoted on potential. And that was creating a dynamic that was not favoring women. So I've seen a lot of things going on, the most exciting being the women. And at the same time, there were some early stage angel groups that were forming to invest in women. So I started investing with them in Golden Seeds and firms like that. But what I realized was, okay, it's harder for those women to get the money. If you want to invest in women, the only available product for you is in risky early stage.
Yeah.
And there was no product to invest in mature companies with women CEOs. So I started thinking about this along the way, 2010, 2011, 2012, and about 10 years ago, we saw a data point where somebody had made the analysis that women CEOs actually outperform. And I said, well, there it is. I need to make the product, right? Because part of the reason that I believe that women get less investment than the data warrants is because people don't believe the data because people can't invest in studies. A study isn't a point in time, but your investment is over the cycle. So I thought, okay, if people are going to start believing this data, we need to make a product that lives throughout the cycle. And that has to be a fund that is open-ended, right? So that's when we started thinking about an ETF wrapper or a hedge fund product, something that would show that it wasn't in one point in time that somebody picked that they could say the data says that women outperform. If you believe it, buy it. That's how in answering your question, we believe that we need to make it possible for people to reap the returns of women outperforming in order for people to believe.
So the ETF itself becomes a research vehicle. It actually, just like anything, public markets, everything is much better documented over time. It stops becoming kind of a point in time data point, and it turns into something that can be referred to again and again and again by looking at performance tracking and by looking at how long that women actually stayed at the helm in those seats and what happened under their tenure.
So we believe that as people live the experience of overperform of our investment thesis being proven right, the women CEOs outperform, there will be more and more investment. And there will also be, and this is one of the very key points of why we need more visibility for this ETF, is because it will allow boards to select women CEOs, right? There will be data that tells you women are not riskier investments. In fact, Fortune wrote an article about us last week that showed that our ETF was outperforming in the market chaos, right? And we've been noticing it. We had amazing performance in February and March of this year, 140 basis points above our benchmark, which is a lot in public markets, as you know. And we started saying, okay, we need some data that's telling us why this might be happening. So we did dig up research that there's studies, so it's over, it's a point in time, but that study balance sheets of companies managed by women, and it's a more defensive balance sheet. It's less debt, more cash. In a down market, that can be advantageous. That can be an advantageous strategy to those companies that have managed their balance sheets conservatively. So those are some of the things we're finding in terms of research, it becoming a live research piece.
Do you think that women CEOs and women leaders, women board members, do you feel like it's still a hidden story? I feel like when I was involved in women's groups and, there was, in California, there was the big push for women on boards. And, in 2020, we were going to have legislation that, encouraged women on boards. It feels like a lot of that has now backfired. But the story, the underlying story that you keep talking about was something that I feel like everyone that I was involved with, anyone, we believed it in our hearts, that there is objective measures of better performance, more cool and calm under pressure, an ability to manage with empathy while also managing for growth, like all of these categorizations of women that make them better leaders. First of all, do you think that this is still a hidden story? And do you feel like, the fact that Forbes published that your ETF is outperforming, is that still kind of novel and unique? Or do you feel like people now accept that story? And if, depending on your answer, why is it still hidden? Why do we feel like we've kind of provided so much data and it's still just not sticking?
So I think that it is still a story. If it weren't a story, then the ETF would be much larger than it is, right? And I think there is a distribution aspect to this in that the wealth in the United States is distributed by a system that isn't necessarily, doesn't have a way to incorporate this story into their offering, right? So the research is telling us women care about what they invest in. That's what the research says. Now, I haven't seen the data point where it actually happens, at least not in my fund yet, but I'm sure I will, right? Because if they cared about what they're investing in because they want a better future for their families and those around them. And that includes the men and the women, right? So it's still a story because there is no mass distribution of this story by the industry because they don't know what to do with it, right? I talked to the really big distribution houses and they all love they love the Hypatia story, but they're come back to me when you're bigger, right? You're too small. I can't put you on my platform. Well, I can't get bigger because you have all the wealthy women on your platform, right? So the system is creating a situation where it's still making this a story because it's not incorporating the story into its distribution.
I think I couldn't agree with you more. One of the things that I recently saw on LinkedIn was a very well-known kind of influencer in the wealth management space basically put out a post that said to advisors, stop clicking on the intergenerational transfer of wealth porn. Because you keep clicking on it, people are going to keep talking about it. But you and I both know, this was the content of his post, that we both know that you're still making tons of money. You're in a very sticky kind of long-term business model, and it's not happening anytime soon, this intergenerational transfer of wealth that everyone keeps hearing about. So there's that on the one hand, which I think the industry is a point of friction with what it is that you're building. And then on the other hand, I've interviewed hundreds of women, and I've even interviewed my ex-colleagues at BlackRock and Invesco who were portfolio managers of billions of dollar plus funds, and they're not managing their personal finances. They're not getting involved. They're not sometimes even attending those meetings where they talk about what they want to invest in. There is this bigger societal, bias and friction to what you're building and what, frankly, what I'm building, what I think, I couldn't agree with you more that there is this shift. There is this care that is coming, and women do want a lot more control over their allocation with things that are meaningful to them.
How do we deliver that? I was at the Portfolio Annual Summit last couple weeks ago in San Francisco, and I'm full disclosure, I'm an investor in Portfolio. I love what Trish Costello is doing. I just think it's amazing. I want her to be as successful as possible. But there were 200 people in the room, and I think she has 2,000 investors. How many women should be invested? How many women can afford to be invested in early stage companies? And how many of those that can't afford it are doing it? And it's a very, very small number. And why? Again, because we have a distribution issue and we have inherent bias against something that isn't being presented in the normal wealth channels. but the normal wealth channels need to have scale in order for it to make sense for them and frankly to cover some of their risk.
You know what's wild is that I know that in the normal wealth channels, they are all very wide awake to the opportunity with high net worth women. That everyone's talking about it in the wealth channels. Like one of their biggest trends that they want to address in these coming years is we need more women clients. We need more high net worth women clients. We need to retain those assets from the divorcees that are leaving at a very high rate.
So I have an answer. I don't know if it's going to work, but I think that we need to get the women that are investing in the same distribution channel, right? So what we're doing, so for example, as you know, as an ETF, we have no idea who our investors are, right? But we know we have 600 investors, right? We should have 6 million, but we have 600 right now. And so what are we going to do? We're going to create and when we went and talked to them, we did a market research study, they all talked about community. And community doesn't mean something I go to all the time. A community for women, I think it's a resource that's there for you when you need it. And you're in so many communities that you can't be in all of them all the time. But you want to make sure that you're in a community that'll give you the answers to what you're asking. So what we want to do is create a community for women who are investing in women, specifically in the public markets and specifically in women CEOs. But it's a community that's kind of go when you want and doesn't cost anything to be part of it. It's just something you're doing. And then, it doesn't stop with us. It's share that community with all the people who can make it grow, right? One thing that is part of a system is that of the distribution system as it is today, because it's of the way it's set up, is that people are very, very secretive with their lists and their contacts. And that's the antithesis to what we talk about. I mean, I give my Salesforce list cut up the way you want it to people who ask me for it because why do I have these 25,000 Salesforce entries of relevant people in the industry if I'm not sharing them with the people that will help my ecosystem grow?
It's that scarcity mindset.
And when we were trying to raise an institutional round 10 years ago, we have 700 really high quality contacts in the institutional market. We're not using them. And even if we were, why wouldn't I give them to somebody who could use them? And, I think that's kind of the ethos that we're trying to build around what Hypatia Capital is about. It's about sharing. It's about making it so that in the system that is set up in a way that makes it difficult for women to grow, we make sure that we're getting the information that we have that we are or are not using to people who can actually use it so that the whole community grows.
What if financial planning wasn't just about numbers, but about you, your values, your goals, your vision for the future? Nomi is transforming client discovery for wealth managers, going beyond assets and risk scores to uncover what truly matters. With behavioral insights and real-time data, Nomi helps advisors personalize advice, build deeper connections, and grow their businesses. Because the best financial decisions start with knowing you. Discover the future of client engagement at nomi.com. It does feel like we are in a much more ripe environment for that. And I kind of also, have been in the industry for over 20 years. And I certainly saw firsthand that there was this attitude of if I made it up here, then I'm going to have really sharp elbows because I worked really hard to get up here. And so I need to protect my spot. And I think that that's fizzled away in a lot of environments. I feel like that Madeleine Albright quote of, women should be helping each other up and doing everything they can.
Right. And I think that's a myth, right? The myth that women don't help women is a total myth. And we have the data, right? So we know that women's senior leadership teams are 80% more female than men's. That's a fact. It doesn't mean they're still 65% male. It's just 35 to 20. So the fact that women don't pull women up is a fallacy that feeds into a stereotype that the system is creating. We're not creating. I don't think I've rarely met a woman that wouldn't want to do me a favor if she could. Even, 40 years or, 30 years ago when women were supposedly not helping each other, but they were. They just weren't being stupid about it, right? If somebody asks you for something that's inappropriate or that you can't deliver, then obviously you're going to tell them that. But I believe that all of us do what's in our power to help people that are close to us and not close to us get to the next stage. And that's why I love the data point that women promote women 80% more than men do, because it's just a fact.
I'm super grateful for you busting that myth and for kind of really calling out that, oh, actually, that's not true. Women do naturally, and as proven by the data, have more diverse teams. They do help each other up. And I think that's super important to clarify.
More important, it is fundamental to change the talent pipeline.
Yes.
If we want a different pipeline, we need more women CEOs. That is the fact. The fact is there is an 80% difference. So either we get more female CEOs or we're going to be stuck where we are in the glacial space, right? Doesn't mean it's not going to change over time. It's going in the right direction. It's going to keep on going in the right direction. But the fastest way to accelerate this is by having more women CEOs.
Do you have any other common myths that come to mind when you think about women CEOs, how they perform, how they're managing, what their impact is, and why it matters? What are some other myths that you think society has just had a hard time kind of recognizing the data and moving on from?
Yeah, I think there's a little bit of a myth of a glass cliff. We've looked at the data, and it turns out that when women are given companies whose share price has been suffering for the last 12 months, 2/3 of them turn it around. So we think that we can't really find a way to compare it to the guys, but what we can say is that whatever they're getting, if they're getting lemons, they're making lemonade. And what we say is, can you imagine if they didn't get lemonades, how much they'd be performing, right? So even if they aren't, because it's usually told to us by somebody who's giving us feedback that, oh, I'm scared to invest in the WCEO because women get these terrible positions. I'm like, well, if women are getting these terrible companies to run and they're still making more than the guys, imagine if they start getting better companies. It's just going to get even better. So that's a myth that we try to steer people away from. And the other thing is that, and I'm going to give my husband credit because he really is thinking about this a lot. He's like, people keep on saying that women are more risk averse as if that was a bad thing, right? That women CEOs would be more risk averse is a bad thing. He said, no, that's actually a good thing because in fact, turns out that most M&A deals, those transformative M&A deals, research tells you those don't work, right? They work to enhance the compensation of the senior management that gets them done, but they don't necessarily work for the shareholder over time.
Yeah, and they don't transform that company in whatever objective they were looking to do that for. Yeah.
Those highly indebted situations, they usually don't work. They don't work. And so I think that it's something we're working on about how to reframe the fact that women change the word risk averse into a positive because it is a positive, but it's not a done deal. The data point of the 80% more senior leadership teams, that's easy. That's an easy soundbite. But to change, I think, for example, Sally Krawcheck, when she was at Elvis, kept on using the word risk aware, but I don't really think that's for an investor. I think for a leader, we're trying to think what is the right way to frame this data point that we're finding that women are better stewards.
Maybe more thorough. We're more thorough, potentially. I don't know.
I think data would probably bear that out, right? The women are checklisters. It's the way you're socialized. And I think it's all about socialization.
There's so many more questions I want to ask. We're wrapping up on time. I want to ask a couple more big questions. So one is, when you think about that distribution challenge, if you're talking to wealth managers or wealth management leaders on this podcast, and they're skeptical. They say, hey, look, ESG kind of gained traction and kind of died away. In fact, I can't even say that to my client anymore. I can't even use that 3-letter, acronym because I have no idea how they're going to react to it. And, maybe they want to like the idea of a women ETF, but they're struggling about how to bring it up. What advice would you give them, those wealth managers who love this concept? They do recognize the data. They're numbers people. Show me the numbers and I'll buy into it. How can you help them have that conversation with some of their high net worth and ultra high net worth investors that would drive more attention to what you've done at Hypatia?
So, I think that I don't have that much experience with high net worth investors and how they bring up different solutions with their clients. But my understanding from the ones I do talk to is that the clients, the really high net worth clients, bring it up with them, right? And I think it's part of a conversation of, what are some of the things you care about? What are some of the things that you're concerned about? And when you talk about that with women, what do you care about? I mean, I think family usually comes first. And if a person has a family, they probably have men and women in their family. And I believe that 80% more women being promoted data point is important to know. And it's something to lead with because it's something that's factual and can turn into, I don't think it's helpful to be like, hey, here's a new product I found. But it's like, okay, what are the things you care about? And then bring it in to that conversation as, have you thought about this?
That is such a beautiful way that you've woven in what NOMI's all about. So that is exactly what NOMI is. NOMI is that behavioral science discovery to really tap into, what do you care about? What are your values? How do I make sure when I'm having a conversation with you that we're tapping into what's most meaningful? What matters most to you, your family, the future, your legacy? What that expression of your identity that is really going to leave a mark on this planet, whether it's you, your family, how is that going to play out? So I love that was your answer. That was a beautiful way, kind of totally not planned in advance, to say, yeah, advisors, you got to be getting into that stuff. You really got to be talking about what is it that really drives you and your family. And when you do, you have a much deeper relationship as a result.
It's a trust relationship.
Mm-hmm.
Your trust relationship is, does this person really care about what I care about? Are they helping me to make sure that what I care about gets taken care of? Now, I'm not a wealth advisor, but because I have the WCEO ETF, people come and ask me, what do you think I should do about this? And so I start thinking about how wealth advisors are reacting to their clients. And I'm like, since I'm not their advisor, I'm really trying to solve what they came to me for, right? And give them the best. It usually has nothing to do with WCEO ETF, certainly not, advising that and the type of issues I'm being brought. But it's so much about really trying to understand the person that you're dealing with and what they're trying, how can you really help them get to the place where they want to be in the way that they want to be. And that, that's a really cool thing to do, actually.
I love that. That is exactly why I became a founder. And it is exactly the gap that we're building into as well. Patricia, we always end with one last question. What is an instance in your life or a conversation you've had that changed your personal relationship with money?
It's something I've been thinking about since I was going to get on this call for days now, because I'm thinking I don't have one particular conversation. It's just it all started in my 20s when I started having some excess cash. And I'd be like, what do I do with this cash? Right? Do I spend it? Do I put it away? What am I trying to do? What am I trying to achieve? And what I was trying to achieve when I was 27 had nothing to do with what I was trying to achieve when I was 37. And so my question is, when did I realize that what I do with my cash, with my excess, has a bearing on who I am as a person and what I'm fighting for and the world that I'm trying to see exist? And I think it was somewhere in that 2000, I think it happened kind of when I knew I was going to have a child, which was in 2005. And I think that led me to be like, okay, now I'm going to have a daughter. Now it's all about the next generation. What do I want to see? And I looked around and I'm like, wait a second. It's got to be a little bit, this is better than my mom's generation for sure. But what would I like her to be able to experience? And that's, I think, really when I started thinking about money in a different way.
Really interesting. I love that. And I certainly resonate with everything you just shared. Thank you, Patricia, very much for sharing your insights, the incredible work you're doing to elevate women in leadership through Hypatia Capital. Your vision proves that investing with purpose brings strong returns and meaningful change. And that I think just in the way that you're speaking, that tenacity is a huge part of it. That it's worth it, that this is a goal that requires that we don't give up. It's that important. It's that big. And I hope that others learn here about Hypatia Capital and that we bring some attention to the WCEO ETF, where is it that our listeners can learn more about you, Hypatia Capital, the ETF, and figure out how can I make this a part of the conversation I'm going to have?
Sure. So first, our website, the WCEO ETF website, has all the information that you need to know, has the pictures of we are the only website that I know of in the world, the only one I've seen, that puts the pictures of the CEOs of their top 10 holdings, and they're all women. So it's fun to go to every day and see how it changes a little bit. So the website, and if you follow me on LinkedIn, first of all, we publish every week some really important data that, again, is myth busting about women CEOs. And second, I repost articles. I'm sure if you see Most Powerful Women's daily newsletter, but it's not the only place to get data about studies that are being published about women and performance. And I tend to repost those with commentaries. So it's a really good way to be on top of the data about women performance, because that's what we're all about, is our investment thesis. Women CEOs will outperform. So every time we see something that contributes to that, we share it as far and wide as we can.
That sounds relevant to everyone, men and women alike, to learn from what are the leading CEOs in the world doing and how are they managing their businesses for effectiveness. For our listeners, after hearing today's conversation, how are you thinking differently about the future of leadership and investing? Drop me a comment or DM. Please share your thoughts about investing in female CEOs, and feel free to reach out to learn more about Hypatia Capital and the WCEO ETF. Thank you, Patricia.
Thank you. This was fun.
Thank you for joining us on the Knowing Me, Knowing You podcast. If you enjoyed this episode, share it with someone who needs to hear it. And don't forget to subscribe, rate, and review. Your support helps us bring more transformative conversations to you. Until next time, keep discovering, keep growing, and remember, you're in control of your own financial story. Follow us for more conversations on financial confidence, self-discovery, and the future of money.